bear than a bull case for oil, like we talked about. But longer term, things are going to tighten back up.
Yeah, that's interesting. I might think about that actually.
Because where are we on the strip in 27? Where's the price of oil in 27?
It's about 63. 63.30, 63.50, basically.
Yeah. The thing is, if you get some sort of event near term, geopolitical or otherwise, you're probably going to get the near month move up a lot more than 27. That's a risk. But, in a calm environment, without any geopolitical events, with, maybe Trump being able to pull some levers to get energy prices down, yeah, that's a good trade.
Yeah.
And you've got nat gas picking back up here. The weather forecast, it's amazing. The weather forecast shift further out and nat gas shifts around. The gas names, E&Ps, were up nicely yesterday, but they're all back down today.
What's going on with Comstock?
I've got to go back and look at that name because I haven't looked at that name in forever. That's Jay Allison.
It's the best. It's the best chart in oil and gas.
It's amazing. I got to go back and see what's going on there. I haven't looked at that name in forever.
It is. Check this out. It is absolutely gorgeous.
That's interesting.
Look at that. I'm no schoolboy, but I know what I like.
Yeah, I have to look at that.
And none of them else look like this. With the possible exception of YPF.
Yeah.
Don't cry for me, Argentina. And we'll talk about it during the show, but I want to hear what you're saying about the majors today. I couldn't quite. That's news to me.
Yeah, it's interesting. It's interesting. This whole AI play.
Share the show, folks.
So Trump rang the bell on the New York Stock Exchange today, huh?
Oh yeah, what for? Just because he likes ringing the bell?
Time Man of the Year might be the reason.
Yeah, he's on the cover of Time
Man
magazine.
of the Year. That's right.
Some people must.
That's what they said was that the reason. I think he liked the camera a little bit. I don't think accepting the Time Person of the Year award is something he necessarily ring the bell for. I think Trump's just kind of making his own rules. He was great with Kramer, though. That was compelling, interesting stuff.
Well, I didn't see that. I'll look that up.
I was listening to Lovesac, Shorting Restoration, Hardware, and watching Trump all at the same time. It was a lot.
That's a lot. That's a lot.
Yeah. I was a little spread thin.
Where's the love sack right now?
Bouncing a little in a dead cat way. Let's see.
I mean, it is like a couple $100 million market cap stock. It's not exactly.
No, it's not the bluest of chips.
What a good line that is. I'm going to steal that from you.
It's all yours, baby.
All right. You got a 26 handle print, though.
Yeah, and richly deserved. I mean, they were pretty bad. There's just it's freaking. What's the market for $16,000 couches? It was speakers. I'm putting subwoofers in my ass. I'm listening to this, getting quotes on these ridiculous couch mock-ups while I'm listening to them say that they're bullish because they're getting a lot more requests for quotes on their couches. And it's like, are you counting mine? Because these are kind of sarcastic. See the way I put 4 subwoofers in my sectional, so I've got one under everyone's ass. That was a joke. That's not a real request.
Whoever the clown is that bought 150,000 shares on the 25th isn't feeling very good right now about that buy.
Rock and roll, Ben.
All right, cool. Let's get it going. It is Thursday, December 12th. 13 days till Jeff's favorite holiday, Christmas. I'm joined by Jeff Macke, Kevin Baker, the Bakes, and Bob Morris. Let's start off with Bob. Bob, what are we talking about today?
So, on the energy side, we're still seeing weak oil prices here. That's weighing on the energy sector. But, interestingly, our two favorite majors that we own, Chevron and Exxon, presented at a conference yesterday, and both talked about getting into the electricity business. And again, this is just looking at this upsurge in demand we're going to see in the future for power for all these AI data centers. And I think it makes sense for them in that, they've got a lot of natural gas production, not only in the US, but around the globe. And a lot of this is associated gas in places like the Permian, where you're producing oil, but you can't produce the oil without producing the gas. And you're not getting great prices necessarily for the natural gas at times. They've also ventured into this whole carbon capture, utilization, and storage business, which is a big business. And Oxy is the one independent that's in that business. But they're in that business. And then they're good at large scale construction and infrastructure. So they're sitting here looking around and saying, yeah, we get it. There's going to be this tremendous demand for power. And rather than just selling our gas to somebody else to go make money on generating power and selling it to these AI data centers, it makes sense for us to try and get into this business. And they're probably looking at their first facilities being in place by the end of this decade. But looking long term, it could be a material business for these two companies. It's not going to move the needle near term, but it's interesting that they're looking at that as a way of monetizing some of this natural gas that may not be getting the best price today versus be able to put it into facilities to make electricity for these data centers. So, we'll see how that plays out. We own both Exxon and Chevron. Of course, they've been a little weak here on the oil prices pulling back in the past week, but I'd probably even more inclined to buy Exxon given it's underperformed Chevron here on any further dip or pullback. I don't know if Bakes has got a chart up there on Chevron and Exxon. Bakes, what is it telling you on the charts here?
I hate to be the bearer of bad tidings, especially in Jeff's favorite season, the most wonderful time of the year. But, I just keep looking at the same things. This closed below the 200-day moving average. This is Exxon. I would have sold a third. And frankly, the 200-day is still going up. The 50-day hasn't come down through the 200. But, and this is decent support at 107. Exxon is not going to move a heck of a lot. It isn't, the highest beta name in the world. So, I'm going to I don't like nothing good happens below the 200-day moving average. Paul Tudor Jones has said that very famously. Having said that, if it stays above this 107.77, if you're patient and you're getting paid by the dividend, it might not be that bad.
Yeah, and we were on Tuesday and we said, look, we weren't buying or selling anything here. We were sort of watching to see where things were going to settle out, both on the crude oil and the natural gas front. And so, yeah, I'm looking for more of a pullback if we get it on any of these names to step up, but. Something to keep an eye on longer term on both Chevron and Exxon.
Yeah, and CVX looks better. I don't know why, but it's holding above the 200-day moving average and, looks relatively better relative strength to my eye.
Yeah.
What's Exxon's dividend yields like 3.5?
It's getting up there. It's got a nice yield. That's one of the reasons I like it. I have to go back and see.
380. 5 dividend.
I get 355.
Shade under 4%. That's not bad. Do you ever sell calls against this thing?
I do. Yes. I've got in one of the accounts. Actually, I'd have to go back and look. In one of the accounts I manage, I do have calls written on Exxon. I think I've got $120 calls. Let me see here. I'll go back and look. But I've got some of those. I think those expire next week. So if I'm looking at let me look at Exxon.
Are you selling like front of the curve where the vol is the most expensive and just pulling that in? Or I think that's actually interesting.
I like doing that. I've got some. Interestingly, I've got some 155 calls on part of my Chevron that expire next Friday. So I'm kind of, looking at that, hoping it hugs in or stays right around 155 here in that near month call goes to zero, and then I can just write out calls again. But yeah, I actually have some 155 calls on Chevron that expire next Friday.
Yeah, I mean, that actually is kind of like, if you like, hey, I like Exxon, I don't want to do anything, I want to collect my dividend, I feel good about owning it, and you get a 3.5 to 4% dividend yield, and you can juice it up with another couple hundred basis points of call selling. Because you've been pretty clear that like you're not like super bullish in the short term on oil or anything, like it's going to fly away from you, like it's micro strategy.
Yeah.
But the
I mean, look, you can get. I'm looking at it. I've been watching it here. I can get 630 for the February 155 calls. So it stays somewhere close to that. If I can get basically 3% on the strike price out 2 months,
getting 20% like type of yields if it just stays where it is, kind of thing.
Right. And anytime I can get 3%, 2 to 3%, 2 months out on the strike price, I mean, that's good. And you get the dividend on top of that.
Absolutely. I mean, it's an interesting thing to think about, because you're like, hey, I like this. I'm not going to sell it if it goes down because whatever. And again, you can also, if you have a view on oil, you can hedge that risk if you want. But that's pretty good. I like it. Anything else this morning for us?
No, I mean, talking about options, the other thing I'm watching here is the March $30 puts on CNQ. Writing some of those, just if it, I don't think it dips down below 30 out that far, but if it does, then you're picking up some nice premium in the meantime. And if you want to own it below 30, you've got an even better dividend on that name down there at 30. I think you're looking at pushing close to 6% dividend yield at 30 if that were to dip below 30 here. So I'm sort of keeping an eye on those if we get a further pullback in CNQ to maybe write some March $30 puts.
But I mean, I guess just the one caveat I would add is trading options is much better for mega caps than it is when you go down the cap table. Like those option dealers usually keep those things wide. It's harder. You got to be very patient and don't hit the bid or lift the asks if you're going to play that game. This is one thing I would just note for the listeners. All right, great. All right, Jeff, let's get it going, buddy. We got
chop it up.
And it's down 20-some% this morning. The Love Sack. Let's talk about it.
Love Sack, yeah, I've had Love Shack, the song, in my head all day, which has been my private hell, and just Love Sack itself is hilarious. They make sectional couches, as you know, that are priced like about the same price as a small car. So you can make mock-ups. I made a 10-speaker, 3-subwoofer sectional for $17,000 earlier today while I listened to this company explode, because the stock had rallied 25-30% in the last month or so. And they just don't have it yet. They said the consumer for that sort of high-end, super discretionary in-home furnishing type of comfort item is not back yet. Now, they've got reasons to think it's going to turn. They want it to turn. But these guys, like everyone else in furniture, to be fair, and the oddity of this company in particular aside, they're in year 3 of having pulled all their demand forward during the orgy that was the COVID lockdown period. And what are you going to do? You're a company that sells beanbags and sectional couches. You can only push demand so much. So they probably shouldn't be public in the first place. It's a great short. And as you and I were talking about earlier, the company that we're banging on is RH, Restoration Hardware. Their report tonight, we were shorting that earlier because there's just no way. If you draw a Venn diagram of the customer base for RH furniture and Lovesac stuff, there's a pretty big overlap. It's just a matter of like 15 years in age. So the customer is not back. Now, they were up last quarter after citing demand being strong. Demand's not actually an accounting term. They just had that kind of feel that demand was up there, and so they were going to be able to meet that. And they actually lowered guidance last quarter. The stock took off anyway. I think they're out of room here going into the number tonight. So, it was a great short. We made some money on it earlier. It's at the lows of the days. To your point on options, I'm trying to figure out how to get short this thing most effectively without just nuking myself. You got to be so patient on sort of the bids and the asks. So, let's just say I'm probing the put space, the bearish optionality space for RH going into the number. I don't think they have it. It's not really that kind of consumer play, and we're not there yet for companies like this getting demand.
Yeah, I mean, Let me just look at this real quick. I'm going to pull up the MOSO on Bloomberg, and let's just see what they got for Restoration Hardware here. You got guys. Tomorrow's 360s are $13. It's okay. You can buy the 255s for 15 cents. Be a hero.
Yeah, and just like all the heroes do. Boy, he was a great guy. God, that was sad to see him go out on those Restoration Hardware points.
You know what's actually interesting is the 300s are about $1. That's a throwaway. I mean, if it's bad, you know, it's going to be right down there. And I don't know how much below 300 you'd get, but you could get that $1 that goes to a couple bucks and sell it in the morning type of thing. If they, you know, the issue is the reason why Jeff and I shorted that this morning was because you see a competitor come out with really negative news in the sanctional beanbag business, and you just have a little vacuum where you have a stock in Restoration Hardware. It's had a huge move. It's at the highs of the 3 year. So, you know, from a longer term perspective, it's asymmetric to the downside. And you just get a free look for a day into the print. Because like I told Jeff, I was like, they're going to take this 380 max into the print. And I think it's 381 right now. It's down 15, yeah. $16. So, yeah, it's like a nice.
It could get even worse than that. That depends on the rest of the day. But this is kind of a shit show. No one's going to want to be a hero ahead of it. Now, the wild card is Gary
exactly.
Friedman, who gives 2-hour discursive conference call type of noise. And sometimes it's amazing theater. Sometimes it's really convincing. And the way he views RH is as it's his own fiefdom, for better and worse. I'm not even sure what business they're in at this point. Is kind of my point. You know, he has so many different things going on. It's a studio for artists. It's a restaurant place. They're doing hotels. He's doing rental jet services. Ultimately, it's a furniture store. And if you don't have demand for your furniture, it doesn't really matter if Sydney Sweeney was at the opening of your Newport store, unless she bought just a shitload of furniture. And she's going to need to do a few more rom-coms to get that type of money, because this is a big company. RH is a big company, and they don't have a huge customer base. So how strong is the economy? I don't know. According to Lovesac, the economy really sucks, at least for when it comes to furniture with speakers inside the headphones or the headrests.
You know, and maybe we'll just mention a little something about Dave & Buster's, because we've both kind of been following that.
What a shit show, yeah.
Yeah, I mean, just so everyone knows, I've been involved with that since they came public the second time in 2014. I flipped the IPO, and then I was shorted on and off between 2017 until, I don't know, like right around COVID time. And, you know, we had been talking about it as a long. Ricky Sandler at Eminence had pitched it at Restoration Hardware, fellow Badger, by the way. And we just, you know, we're worried about that quarter. It comes out bad. And so you look at Lovesac and Dave & Buster's, they're kind of the same thing, where they're opening units and then the units are negative comping, but they're trying to show the earnings growth, or at least stabilize earnings, but through more capital. And that's, right. You know, these things had a story like, oh, furniture is going to rebound, or Dave & Buster's turnaround. Well, they just were down 20-25% when the reality hit of the earnings yesterday for Dave & Buster's and today for Lovesac. And I think that my larger point on that, you know, is that let's forget price does not equal fundamentals. There's a lot of stuff that can be, especially right now, diverging based on stories, based on people who want to short. There's not an arbitrage, you know, because like we just have these two stocks that we're involved with, and it's just like, oh no, you actually still suck. You know what I mean?
Yeah. And the tension just winds up. I mean, eventually you got to get growth, right? And that's what happened with Dave & Buster's. That's what happened with Lovesac, which actually, I mean, the financials aren't terrible. They don't really have any debt. They can just kind of be this thing that they are, and they could be great. They'd be a great private company. You just have a ton of cash, but the price they're trading at now, they shouldn't have gone public in the first place. They can't get out of it now. They don't really have growth. They're just barely on the happy side of being kind of income generating, but not by much. And they can't draw their own traffic. That's where Dave & Buster's and Lovesac have in common, is really they've got no way to market themselves out of this. They have to come up with some sort of magic sauce where it's like, you know, don't you want to visit your old friend, the sectional couch? You know, remember beanbags? God, they were awesome. mom would hug you in a beanbag. That was great. What are you going to do? If people aren't at the mall, no one's dropping by Lovesac, and they're pretending like it's a growth story. It's not. It's sectional freaking couches. You should have heard them talking about making reclining technology for their sectional today. It was honest to God the space program. We spent 8,000 hours designing this, the finest technologist in the world, and they're showing a guy slowly reclining in his chair. It's like, wow, man, that you guys invented the recliner. That's amazing. And they're talking about that like it's their growth. So of course I added it to my mock-up couch for $1,200. But I'm not actually buying the couch. That's the problem that Lovesac has. They can't close the deal unless they have traffic there. They can't draw traffic themselves. And so you end up with this perpetual turnaround, which is really just a levered bet on the economy. And there's more efficient ways to do that.
And one other thing I'd say is that, and Build-A-Bear Workshop had this problem for a while either, is these guys who can't comp positively but then become public, in order to try and justify their valuation, they keep opening units. But let's remember, when you open units, that's more capital. And more importantly, it's more liability. It's like your OPEX is going up. Your liability for rent is going up. Your risk, if demand gets smushed, is now higher. And so
in the case of Lovesac, they're opening stores at minus 8.5% comps. Are you out of your effing minds that you're opening more display show? What are you doing? It's you don't need more of these showrooms. They're not going to move that stuff. And you're right. You do it because then you can pretend you're a growth company. Then you can say, look, our revenue grew. Well, all it cost us was building 20 new stores. Now we have 250 sectional stores out there where people can come in and remember their old friend, the beanbag. But again, that's not really going to get it done. Eventually, you got to sell more of the things. It's not that kind of party. You're running out of customers.
Yeah, I mean, maybe they should sell lava lamps.
For sure. They could join up with Spencer's Books. I went to Spencer's Gifts when I visited at Dave & Buster's. Man, the whole Dave & Buster's enterprise was really a mistake now in retrospect, because not many people at the Spencer's and not enough people at Dave & Buster's last quarter. They also axed the CEO, which was not a huge vote of confidence. So there's separate stories with similar problems. And the problem is that, the consumer is better than expected, but not that great. So you've got this super binary winners and losers in retail right now. The winners are just like, everything's Jake. You talk to Abercrombie and they're like, shit, there's never been more teenagers that want to buy our stuff. This is amazing. You talk to, Foot Locker and there's not a kid in the store.
Yeah, you saw, man, by the way, that Spencer's brings me back. That place was great.
Right, it was amazing. And it hasn't changed even a bit. Still selling the same crap.
It's amazing. The last thing I'd say about this, just to bow tie it, is Dave & Buster's and Lovesac. I just don't think you want to be in the game of buying the dip unless it's getting to a price that's like absurd. And for Lovesac, that's much lower. For Dave & Buster's, I think maybe 24. I said that yesterday. $24. You could maybe start to nibble a little bit. But again, you don't really know what the stability of the business is, so it's very hard to say that there's any foundation. But I think tax loss selling, and anybody who was long the narrative and got stuck, you can expect these. Yeah. And Dave & Buster's is now $28.50. I mean, it's faded another 12% since yesterday's morning.
It was just such a bad exit for the CEO, and it was such a bad look to it threw into question the entire turnaround plan, the entire idea of it, when in actual fact, they should be taking their time on it. They're a cash flow positive business. So why don't you just sit in the pocket for a little bit and try to figure your way instead of over promising, which they ended up doing. It didn't seem that ambitious when they were talking about the remodel schedule, but it turns out they need more time to figure out what works and what doesn't. And, we don't need to chill. To your point, it eventually it gets super cheap. Neither of these companies is going to disappear as much as people want to give them shit. It's I love to tease Lovesac, but I would also like to own the entire thing and just kind of be collecting my $40 million a year and not have to hold conference calls.
Totally agree. I think both of them should be private, to be honest. And look, Dave & Buster's went private. They got taken private by Wellspring, I believe, back in 06 or 07. So, I think that some of these businesses just aren't meant to be. They can be fine businesses. And like you said, neither of them, I guess Dave & Buster's has a little debt now, but it used to not pre-COVID. COVID kind of got them. But anyway, that's enough talking about shitty consumer stocks. Let's move to banks. What do you got for us, buddy?
By the way, I like your make volatility great again hat. That's very nice. I appreciate that.
Well, if there's no volatility, what the hell are we doing?
Amen. And if you get a chance to listen to Gary Goldman's bit on Spencer Gifts, it's absolutely hilarious. So I recommend that you take that down. All right. First off, to completely shift gears from shitty retailers, as you say on this family program. This is Tesla. And the reason I bring this up is just facts are stubborn things. And, people almost universally, say this is overvalued and what have you. Well, the market is very smart and decided that the day after the election, it was going to take this stock from 271 overvalued to 424 overvalued, up 56%. And so I just say for especially our younger subscribers and listeners, the market doesn't care about your politics. The market doesn't care about your spreadsheets. It doesn't care about your valuation opinions. And valuation doesn't matter until the chart says it does. And I'm probably giving Robert Marshall an aneurysm right now as I say that, but it's just like we've seen this 1,000 times. I saw it with AOL in the 90s, and innumerable examples since then that yes, the valuation is stretched at 167 times earnings. I get it, but it's still up 56%, and it isn't all just short covering. So I just and this also plays into the Mag 7. This is a new high in the Mag 7 that is acting really well on okay volume. By the way, this isn't a monstrous breakout, but I just bring up the point. If you can have an evaluation opinion, but make sure the market is starting to agree with you. Otherwise, you're going to get your head handed to you.
I mean, Tesla. Yeah, I had a lot of
crazy,
pain
but
over the years.
It's not personal. People take Tesla so freaking personally, and especially after the election, because that seemed like such a shit show thesis. It's not like it was hard to wrap your mind around. You know what? It's probably bullish that Tesla's hanging. Elon Musk and the future president of the United States are super good buddies. That probably is going to work to Tesla's advantage somehow. And that lit a spark under this. And, we're off to the races. Not a ton has changed on the fundamental side of things, but things are looking up in the Musk universe. And Tesla kind of reflects that. So you can scream at it, yell at it, bitch at it. But it's not a fight to the death. This is not a suicide pact. When I say I want to get bearish on RH, Godspeed, Gary. If you blow the number out tonight and the stock goes to 450, I'm not going to sit there and be the guy who fights at it and goes to the grave whining that it was an unfair game, that it's overvalued, that it's all crap.
Yeah, fair. And I lived that life, and it's not very fun. So I would just say that, what you said about, okay, Elon, the president, I mean, what percent market cap addition is that worth? To try and I know I'm not saying you got to give me an answer. My point is like, that's what I think people need to, like, in all these Trump trades is like, okay, the narrative and positioning drove where we are. And so if you're looking into 2025 or even whatever, like some shorter term time horizon, you got to be like thinking about what incrementally am I going to get, or what do I need? It's a $1.4 billion or $4 trillion market cap now. I mean, is it 3 trillion? I mean, like, the valuation relative to the other guys who are up in this neighborhood, they're not making much cash relative to the Metas and Googles and Apples and and so I don't know. I'm not gonna like get too into this, but like, Bakes, you think it could just pop up, pop down? You think that line you did, would that be bearish if it just popped down?
Right now, I've got this arrow here, which just shows it's more than a Trump trade. I mean, the Trump trade was this day after, and when it broke through this 271 level, and it's turning blue right now, positive right now on above average volume. So I think. This doesn't get bearish until you go back below this. Everybody's made money here. That's long. everybody's made money that's long, and the converse is true. Everybody's is lost money if they're short. So if you get below 414 on big volume, then I'll start getting my antenna up. But I wouldn't short this with your money. I mean,
No.
Yeah, I mean, I guess the only caveat I would say is that it feels a lot like Q4 21 right now. The fart coins ripping, Bitcoin's ripping. The market melted up into the end of the year. The high was actually December 31st. And lo and behold, Tesla is at the same price it was back then, or maybe it's a couple bucks higher. And back then they'd earned about 12. In 21, they earned 12 billion EBITDA. Well, the consensus estimate for this year is 15. So, it's grown a little bit. It's grown, there's been some multiple reduction, but it's still a very large multiple. And I just, whatever. I'm not going to talk about this anymore. It is what it is. Tesla is a religious topic in the markets these days.
And I'll tell you, not for me. I mean, I'm dispassionate about this, and I urge people to check your politics at the door. Don't act like your spreadsheet is sacrosanct, and because you plugged it into a cell that it matters. Yes, you can use it as a framework, but here's the market. Millions and millions of smart people with Bloomberg's saying that Tesla is worth $425, $11 more than it was in this all-time high, and the technical picture is positive, and people are going to buy it. So,
you know what, Biggs? What I love is the stridency with which you declare your dispassion. Because you just you're bringing the passion 24/7.
I'm an enigma wrapped in a riddle. I'm like Churchill. I'm an enigma wrapped in a riddle. So anyway. That's a reference to my weight more than anything else. Anyway, this is Google, and I know I try to do things that are a little bit more esoteric and off the beaten path, but I just go through everything we talk about on a daily basis. I put it into my system, and then I bring it up. And frankly, I thought Google was kind of dead here. When it closed below this 200-day moving average. And, they are Lazarus. I mean, they have changed themselves around. This is a new high on big volume. This is the best Mag 7 chart right now. This is 2 times normal volume, hitting new highs. It's 2% of the S&P. Tesla's around 2% of the S&P. And so, you have window dressing going on towards the end of the year. I think a lot of people shared my view that this was sort of, lackluster money to dead money, and it's the strongest of the Mag 7 right now. And once you break above into an all-time high like this, and it's in the top 10 of the S&P, people are going to have to own it if they don't. And I think it's happening. Only Microsoft and NVIDIA did not hit new highs yesterday, by the way. And the other new highs are on below average volume. So the Mag 7 isn't exactly ripping, but you've got Tesla and Alphabet that are leading the charge higher.
Hey, Bakes, is the old high your stop then?
Pardon me?
Is your old high the stop if you're trading these at home? If that's the game you're going to play, is that where you'd stop yourself out of these longs?
Yeah, I never lose more than 15%. So that's first off. Okay. Anytime I see negative 15% on my statement, I shoot the thing. I call it Old Yeller. And that's one. Number two, and these are not, precise numbers, but if it closed below 180 and my whole thing is, does it close below this line, 180 or so, and does the volume pick up? If it's a low volume, holiday shortened week, that kind of a thing, then I don't care so much. But below 180, I would get concerned. And I don't, full disclosure, I'm not involved here now other than in, the S&P index funds that I own. But that's a good thought process.
Got it.
All right. Anything else?
Oh, yeah. And we talked about this last night, but, we're smart people, and Ben Brey is very smart. And here is Booz Allen and he and I have been talking about this, but I'm going to talk about this because there's still widespread skepticism that Doge is going to do anything. I listen to podcast after podcast, and it tells me, well, you can't get to $2 trillion, and you're not going to touch Social Security. And I say, I don't care. If you're a company with 95% of your revenues coming from the federal government, you're going to have a problem. So this is Ben Brey on the day after the election, shorting this at 185, 190, and it's reversed for that day, which is always a good sign when it closes below the prior day's low. And I don't know if you're interested in making 28% in 5 weeks, but we are. And frankly, we're worth the price of admission for a subscription with this one idea. This is a rip-roaring bull market. No one's talking about Doge except Ben Brey and Bakes from very, very different perspectives. And here you go, you're short at 185, 190. You told me you covered around 140. But my point here was we are here at 134.66. This is the low, and we're taking that out. And so then you start looking at 130 or so and lower from here. So. And by the way, we haven't had the inauguration yet, and we haven't had the real revenue and income statement impact yet. And there's other charts that look like this. The defense stocks are rolling over. So, and I also point you to Barry Weiss interviewed Macke Andreessen, and he is an unpaid volunteer for Doge. I did not know that prior to this, and he is spending half his time at Mar-a-Lago. So you've got very, very smart, focused, powerful technology people that are going to put the government on a diet. And I think, yes, we made a lot, Ben's made a lot of money. Our subscribers have made a lot of money, going down 28% in 5 weeks. But I think that, you'll have some bounces here, but we're on to something, and we're going to continue to ride this horse.
Yeah, I mean, it was just kind of stupid how it rallied, like after the election. Like 95% of their business is the government, and look, this thing came public in 2011. I remember doing a lot of deals and stuff. Used to trade at like 6 to 8 times EBITDA. I think it was up at like 18 times EBITDA, and I was at 14 times EBITDA. I mean, again, they're like 54% gross margin. It used to be 50, so take that down and then maybe give them a little haircut on their revenue. They're not even like getting totally, and you're down to like $1 billion. And that's assuming some cost cuts. I don't know. If it goes to 8 to 10 times, the stock can still 50% down from here. I still am short a little bit, but it was pretty fast. Like whenever things kind of move in a nonlinear way, I like to take my positions off. Plus, shorting sucks in general. And so when you get it in that high RRR, it's good. But yeah, I think the Doge thing is interesting from not just like the revenue standpoint, but also the regulatory side of it. Like if they deregulate and they are challenging, yesterday we had this headline about they're going to challenge the PBMs. I think that the government has subsidized a number of industries that are quasi-monopoly, oligopoly type businesses, big ag, big food, pharma, banks, and guys just got used to doing business like that. And, Elon, whether you like him or not, he's a disruptive guy, and Trump's kind of a disruptive guy. So if there ever was going to be a shot on goal, to use Mr. Minnesota Jeff Macke's term, this should be it. And so we'll see. Maybe the Leviathan is too big to actually do anything. But I think that like people in the status quo currently are way too complacent when they're not saying. I mean, they sound pretty serious about like doing things differently. And obviously there'll be institutional pushback because some people's cash flows and well-being will get screwed up by it. But I don't know. Things happen. Like no one cried for the coal workers, did they?
And I'm just here for the money, and I'm just reading. I'm the chartist, and I'm just calling them like I see them. And I think subscribers, we make money for people flat out, and not many people made 28% short in 5 weeks, and we did. So, and you did. So I just highlight that. Come join us. Try us free for 14 days. And, there's going to be many more ideas like this that we're going to be talking about. And it's also a hell of a lot of fun.
And speaking of smart people you want to hang out with, to kind of bring this back to what you were saying, Bakes, Mark Andreessen is a smart guy. Elon's a smart guy. They're going to monetize all this hanging out they're doing with the president in the White House and the Doge industry, industrial complex rip down that they're doing out there. Like, this is going to be a thing that happens just based on the fact that these are very wealthy men who wouldn't waste their time on it otherwise. Like, clearly there's going to be something that happens. We don't know what it is. It's sort of an unknowable problem at the moment, but it like it or not, you can rage at it, but you're better off just betting on the home team because that's where it's going.
And, there are very few altruists, and I think there's almost no altruists. And but I encourage you to listen to both the Rogan interview and the Barry Weiss interview of Andreessen. His disdain and battles with the Biden administration is monstrous, absolutely monstrous. And there's a new sheriff in town, and his name isn't Reggie Hamlin. It is. I think it's a new world, and we're going to try to keep our eyes open and make some money from this. Again, I don't care about your politics. The market doesn't care about your politics. We're in this for the money, and so we're going to help you.
Yeah. And one last thing, Jeff. I just had a buddy text me. Just so you know, Lovesac had $3 million of barter revenue this quarter. I love that. They're the only guys I've ever seen that do barter. Bob Morris. You ever seen a guy recognize revenue as barter? Like, hey, we'll give you some couches and then trade for media credits, but we're going to call it revenue. It's the most absurd thing I've ever seen in my life.
What kind of hippie commune are they running? Did they run? They're at the lows of the day, man. To the conversation on RH, like, who's going to defend these guys at this point? If RH goes up tonight, no one's going to step in there and try to be a hero on it because the fundamentals don't really have your back. Yeah, Lovesac is fine, but why would you possibly want to be along this? The chart is completely broken. We were all locked down together. This is not a national secret. We all spent freaking a year and a half at home. That pulled forward an awful lot of demand for beanbags. That's just not going to be a growth industry in our lifetimes. It's an item that lasts a really long time. Your sectional couch.
I still haven't bought my beanbag, and I have no plans to buy a beanbag, so I'm not.
You're not inclined. They sold lava lamps. Would you be going in there then?
No, lava lamps doesn't work for me either.
Okay. But I mean, these guys got their earnings restated last summer. They are, I'm a big fan of buying companies where they're very smart people together. This is not that company. This is an overpriced beanbag sanctional.
And they're just kind of trying to figure out how to be public. I mean, it's you listen to them talk and everything just screams, we should be freaking private. We should be just this great little story that we don't have to share with our neighbors all that much. But instead, they're just pretending like it's a growth story, opening a bunch of stores and all that crap. It's not. The companies all do this. Peloton did this, man. They kept opening stores for ages. They still have stores. It's like, just, your growth days are behind you. Just be a business at this point. And I think Lovesac investors in particular are going to wish that they would have stayed private when this is all said and done.
Yeah, I mean, it's just, I'm just annoyed because it should have never floated to where it did. Like, I'm happy because I'm shorted. And so I guess, today's a good day, but like just recouping like the stupid move, and now I'll finish with that is that shorting sucks because of that. Exactly. You take pain, you take pain, and then if you are weak enough and you just can't take any more pain, then you miss it. And you were like, oh shit, I was right. And so it's just the payoff structure or the feedback mechanism is just a very difficult thing. And that's why you got to size them appropriately. So you're not like, it's not pushing you or you're thinking about it and staring at the screen. Because otherwise, look, this Lovesac, I've been shorted for a long time since 2021 at like $72. But, it got down to 15 and it made it move to 40. Like, it's not that fun.
No, it's complete vapors. And they're not going out of business. And so it's all just valuation.
Yeah, exactly.
It's still, if you get right down to your freaking, let's throw some financial models at the thing, you're going to come up with like $10 maybe is what it's actually worth. Slamming air quotes around worth really hard. Right.
Yeah,
Yeah, that-
$10 was kind of my number also. It's like, it's probably a $10 stock. So
And so that's what it's worth, and everything else is bullshit, and people just guessing on what the economy is going to do. Everything else is just kind of fake, and you can sit there and whine about these stocks all the time, but there's a timing to when you short them, and the tide's always kind of against you because most of these companies don't disappear.
all right, I think we're gonna wrap it up there, guys. Thanks for hanging with us. Thanks, Bob, Jeff, thanks, appreciate it.
Peace.
Take care.
Merry Christmas. Shop early
Merry
and often.
Christmas. Take care.
Hey, Bakes, are you still there?